Trias, we did a great video on the 1st of August, and today we're going to do an update. Is it going to be shooting up towards the moon, or should we anticipate a short-term correction so you can really see what action should you take based on the psychology of buying and selling? Hey, whatever you believe about the utility of the token, we need to understand that speculation is a real thing, and a lot of buying and selling is happening based on price action as opposed to the fundamentals of the project, especially short term. So today, that's what we're going to dive into, an update on Trias. Hope I'm pronouncing it right. Trias or Trias, correct me. Which one is it? Trias or Trias? I'm not totally sure. You let me know. So today's video, if you like, subscribe, hit the bell notification if you like the content. My name is Jagir, by the way. I am the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been trading currencies for over 15 years now, featured in the best-selling book, High Probability Trading Strategies, back in 2008. But today, we're going to focus on blockchain, we're going to focus on crypto. Let's dive straight in. So Trias, I'm going to stick with Trias for now. Trias is low market cap gem. You know, a lot of you have asked me about this. You know, what's the market doing right now? And we said, look, it's not a really clean pattern that we said, but we are waiting for a good move to the upside that will give us confidence in the buying behavior, and then we can anticipate potential new all-time highs and what that looks like. But since we did this video, we've actually seen some good chart patterns, and that's what I want to dive into today to give you a nice update. So let's dive into the daily chart. Now let's just focus on the pattern initially, the pattern. So this is what we have with us. You know, we had this amazing move to the upside, big correction down here, kind of went flat for a little while. But since June 20th, we've had this move to the upside. And that's what I'm going to focus on today, this move here. This move. What is this? What should we anticipate? Short, medium, and long term. All right, that's going to be today's focus. So now let's just zoom in. We just zoom into this, right? That just makes it a lot clearer. And what we're going to base our analysis on is this part, right? This 1, 2, 3, 4, 5. We're always looking for these identifiable patterns, especially in the 5 waves of impulsive waves, because what follows 5 impulsive waves is a correction, even on a shorter time frame of an ABC. Want to be really hyper aware of that. End of an ABC is a good time to buy, and then at the top of these 5 waves is a good time to sell, depending on your strategy. So that's what we're going to focus on today. So what I'm seeing here with Trias, I might switch between Trias and Trias because I'm not quite sure which one's the correct one. Right? It looks like we've got this nice wave 1, wave 2, a nice wave 3, a wave 4, and it looks like we're forming a wave 5. Right? We want to be hyper aware of this. Right? So that's from a pattern perspective. So what we have clearly is this wave 1, 2, 3, 4, 5. So we can actually do some end of wave 5 projections. End of wave 5 projections. This is using Fibonacci price. Now Fibonacci price projections basically measures the psychology. Ralph Nelson Elliot figured out that the markets respond really well to 1.618, the golden mean, and different ratios of those ratios. So that's what we're going to use today. So some really powerful ratios. So first we're going to use something called trend-based fib extensions. By the way, I'm going to be bringing out a masterclass very soon. Hopefully it's going to be available within the next 7 days. Once it is, I'm going to let you know. But yeah, let me know if you're interested in that masterclass. But it's really to how to do Elliott wave and Fibonacci, because there's many coins and tokens you want me to cover, and I normally only do 1 video a day. So, you know, you can do the math. So here, let's do this. So we're going to measure wave 1, the beginning of wave 1 to the end of wave 3, and project it forward from wave 4. And the typical price zone for an end of wave 5 is 62% to 100%, which is represented by these two numbers and ratios of wave 1 to 3, right? So if we just kind of make sure you're clear on that, sometimes it's difficult to get your head around. We're measuring wave 1 to 3, which is here, and we're projecting it forward from wave 4. And you can see that's where the 100% is, and this is where 62% is. So we've got this nice broad range of where we should anticipate some resistance in price action, and then anticipate a correction. Remember, we're looking at this part here, you know, end of a wave 5, and then you should always anticipate a 3-wave correction. It's always best practice. And then we're going to do one other one today. We'll keep it simple today. It's going to be in external retracement. The one that I want to focus on today is measuring down here to here, but we've got 1.618. That's going to be a very common. And you can see that the price is just shot way past this. And actually there's one last projection as well, which is very valuable to us. is measuring wave 1 and projecting it forward from wave 4 to measure the likelihood of wave 5. And wave 5 is usually a maximum of 1.618 of wave 1. And you can see it's right in that zone right now. So we're reaching what looks like to be a highly probable resistance zone with pattern and price. What can we do next? What can we do next? Well, let's look at momentum. Well, first, let's just jump into a weekly chart. Weekly on the top left. You can see that the momentum is overbought. So we should anticipate sideways to down over the next few weeks. But more importantly, more immediate is going to be this daily chart. If we bring out the momentum, we can see that this low and this low marries up quite nicely. This high and this high marries up quite nicely, low to low and high to high, low to low. And then again, on the next bearish reversal, when the blue line goes below the red line, it will probably coincide, with this high over here. So the last thing I want to do today, because then we're going to, there's different courses of action that you can take, and I'll tell you my thinking. So let's just jump into a 4-hour chart. Bottom left, I keep a 4-hour chart down here. Again, let me just change this. I want to just make sure it's visible on the hourly chart. There we go. So we don't have to redraw those. So we've got this 1, 2, 3, 4, 5. You can see the same information, same projections, same data. But what we have is a bit more of a micro count on this part here. Can this give us any valuable information so we can narrow down the zone? So if we just actually zoom in, right, if we just zoom in, I'm going to bring it here. This part of the market here. What does this look like to you? Well, to me, this is like a sub-degree count. So we're going to have 3 levels of counts. We've got a wave 1, then we've got a 1, 2, 3, 4, 5 of a wave 1. But then we're seeing if there's a wave 1, 2, 3, 4, 5 of a wave 1. 1 or an A. I don't think we've written that in yet. So let me just write that in so it's really clear. Because when you get multiple degrees of counts, all saying the same thing with multiple degrees of Fibonacci price, then you have a high probability. So I'm going to write 1 or A. I'm going to tell you what that means in a second. This is important that we write 1 or A at this stage because we're not sure what it is. All right, so what I'm seeing on a micro count is a wave 1, a wave 2, looks like a wave 3 because we can look at this and go, this looks like a 1.618. Yeah, bang on. Look at that, 1.618. Then we've got this other correction, and then looks like a final move of the wave 5. So if we kind of project that forward here, if we move this around to here, this is to here, I'm saying, does this look like a 5-wave structure? And when it does, we want to identify it. We're going to go, it looks like a 1, 2, 3, 4, and looks like making a 5. We'll change this to a micro count. So it just makes the letters smaller. So it looks like a potential wave 5 of a 1 or an A. Right, what the heck does that mean? Yeah, what does that mean? Well, it means we can do Fibonacci retracements the exact same way as we did for the larger degree, but for this part here. And it just narrows down the price zone to say, right, when we measure this, the 2 ratios that we're looking for is 62 and 100, right? So now it's clustered over here, right? This means that this 100% extension that we did previously is really significant, really significant. We can also do the external retracement here. Comes right into that zone, so this is really significant. And then last but not least, we'll do the same one again, but on a lesser degree count. Measure this wave 1, project it from what looks like to be a wave 4, and then measure the 2, which is the 100% and the 1.618. So all of a sudden now, we've got this real tight zone. Here we got this zone here. And we've got this zone up here. And what you tend to find happens, if one gets exceeded, it moves to the next. So now we want to be hyper aware of these zones. So now, let's just say you bought Trias for a short-term buy. Let's say it was a short-term buy, or you want to do some initial profit taking, and you managed to buy somewhere down here in the, $2, $3, $2.50, $2 under $3 mark. And now it's reaching $9, which is the 3x, right? So we did our video. What was the price? The price was around $4 when we did our last video. So it's done more than a 2x, 2.5x or so since our last video. Now would be a case of considering taking your money off the table. 50%, 30%, 25% to go, okay, it's looking like it's reaching a local high. It's probably going to do a correction thereafter. So where would be a good profit taking point is swing lows. You know, if it takes out the swing low, if price goes below the swing low, around $8.30, that'll be a good point. We can, you know, let's just say price moves up and comes around here. You might be able to trail your stop loss a bit tighter, but then it'll tend to move down this way. And by the way, again, I'm going to cover this in my masterclass in more detail because I want you to be able to do this. So when there's coins, when I can only cover one a day, you can be doing this yourself with, you might have 10 that you're looking at as well. So now let's just jump back into the daily chart. Hopefully that was really, really clear to you. So we're going to jump back into the daily chart. And we've got this micro count. We'll leave this here. We've got this zone here. So let's just say the price does, because I want to just give you just the thinking. Let's say it does go here. What should we anticipate next? Well, going by Elliot wave theory, which is just identifiable so many times with crypto and blockchain, and we should anticipate a minimum of an ABC correction. So let's just do, again, this is me forecasting now, but it's just to kind of give you the viewpoint of what you should be looking for. After a five wave count is finished, you should normally anticipate an A, B, C correction. The price retracements tend to be a minimum of, again, I'm just guessing that the price gets to $10.90 for this example. It could be, you know, anything can happen. That's the important part to note. But typical correction is 50%, 62 to 78.6%. So I'm just going to get rid of this one, and I'm just going to show you it like this. If I can grab this, will it let me? Yes. Okay, brilliant. So basically, this is a real time. This is a price zone that you want to be aware of. So it's likely that Trias is going to pull back into the $6, under $7 to $4.40 range before it moves up. That's just a natural movement of buying and selling. You need to be aware of that. You need to be okay with that. That's just the nature of the markets. So you can, but you're looking at this now ahead of time, because normally it's hindsight, right? The market moves, and most people say, "Ah, man, I wish I just took profits up here," and the market's pulled back 50%. But now you're seeing it ahead of time. Doesn't mean it's going to happen. It's just highly probable. And then how long does that take? Typically takes around 50% of the wave move to the upside. So we should anticipate, if we just do it like this, if the five wave structure finishes by the 19th of August, the correction should go down to at least the 3rd of September. 3rd of September, right? Early September, give or take. But again, we don't have this information yet. We're waiting for the correction to occur. But now you hopefully get this information ahead of time so you can do the action. Let's just now finish on a bit more of a macro picture. We've got a lot of information here now. A lot of information. Let's just reset this chart. Now we drew this 50% line the last time to say, right, overall as a macro picture, we've got this big move to the downside. We should always anticipate 3 moves to the upside. This is the first one. We've spoken about the second move, and we should anticipate a 3rd move to the upside, right? Now we don't know at this stage if this is going to continue to the upside or if it's just going to be a correction and then we get a further correction. We don't know that at this stage. We don't have that information. It really is going to, this bar, this way, if it does unfold this way, is going to give us the information that we need to say, is it looking impulsive or corrective? What we do know right now is we've got this 5 wave structure to the upside. We're probably going to get a local correction, and then we'll probably get a 3rd wave. Always anticipate 3 waves, and that's what we can be pretty confident with. And then you can make your decisions. So there you have it. Trias, correct me, which one is it? Is it Trias or is it Trias? I'm not totally sure. But it's a, you know, it looked like a strong project. Love the following. Like, you guys have been commenting on this a lot, which is great to see. But purely from a speculation, psychology, price action, buying and selling, profit taking, you need to understand there's sophisticated investors involved in all of these projects, and they take profits at certain points. And when they believe markets are overpriced or they've been overheated, like too much panic buying occurring, then profits occur. And buying and selling really drives the price more than the utility. Utility is just the fundamentals that really gives the project confidence. But short term at this early phase of crypto, it's really buying and selling. But that's really normal with most markets. So let's finish with a quote. We're going to finish with a quote with my book, The Extraordinary New Venture Capital Opportunity. I started every chapter with a quote. Today's chapter 5 it's very simple. It's one of my favorites. It's Leonardo da Vinci. Simplicity is the ultimate sophistication. Keep your strategy simple. Whether it's Elliot, it's Fibonacci, whatever you're using, simplicity is the ultimate sophistication. In other words, the simpler it is, the more sophisticated the person that came up with the thing tends to be. It's difficult often to make things very simple. So keep things simple, keep winning, keep progressing, keep learning, and I'll see you soon.